Thank you very much for staying. Welcome back to the marketplace. Now, Governor of the Bank of Ghana, Dr. Ernest Addison, has attributed the increase in the public debt to the cedi's marginal depreciation. Latest numbers from the central bank showed the debt stock went up almost 1.4 billion cedis to 139 billion Ghana cedis ending June this year. The following business desk report has more of this and the decision to hold the policy rates and other developments in the banking sector.
According to the Bank of Ghana, the decision to hold the rate at 21% was as a result of threats to economic stability. The policy rate, which influences the cost of credit in the country, could therefore mean that with this development, we may not see any significant increases in cost of credit and interest, especially for commercial banks that take funds from the central bank and lend it to businesses. On the current challenges with the commercial banks, the governor noted that most of them have improved their financial position.
As of the September 20th, all of them had, performance that I would say satisfactory. We are quite satisfied with the outcomes that we saw at the end of September. And right now we are trying to focus more on the new minimum capital that we have set. That is the 400 million for December 2018.
The governor also justified the decision to have a one-size-fits-all approach when it comes to the minimum capital requirement, insisting there would not be any special dispensation or waivers for any bank.
And having financial sectors or a bank that can mobilize adequate resources and finance big-ticket transactions is crucial in being able to deliver that transformation. And this is why we are emphasizing the strength of the capital of the banks. So yes, if you think that you are operating in a niche that does not require that you should have a 400 million level of capitalization, you can choose to go for a savings and loan license.
The governor also announced that improved earnings from the country's exports could help improve the country's reserves in the Ghana cedi.
Meanwhile, the central bank governor, Dr. Ernest Addison, has confirmed that some banks are already in merger and acquisition talks.
Right now, we are trying to focus more on the new minimum capital that we have set. That is the 400 million for December 2018. And you are asking the question whether that 400 million will be enforced. And we have given that indication that we would enforce it. We would ensure that banks that are in operation by the end of December 2018 have met the minimum capital requirement. So I have no doubt in my mind at all about how committed the bank is in ensuring that that particular requirement is met.
Let's also stay within the banking industry, and commercial banks should by November this year submit a detailed plan on how they intend to meet the new capital requirement levels. The banks are supposed to meet this new level by December 2018 or lose their licenses to operate. Raymond Amanfo is head of supervision at the Bank of Ghana.
You know, drawing a capital plan, you need a lot of time, you need a lot of discussions as to whether your plan will be a merger, will be acquisition, or your shareholders are bringing. I think we have to give you some space. So we have given the banks up to November end. 2 months is enough time for you to look at all your strategies, all your plans, because we don't want just plans. We want plans with timelines and figures. So that if you say X, you'll be done by this, we are monitoring you by that. So we've given the bank some enough time to bring us a recapitalization plan, whether they want to do merger, whether they want to do acquisition, who are they talking to, who are they firming up with. Because at the end of the 2 months, I don't want just discussing with this. I want, we have agreed with this. We have agreed with that. These are modalities. These are resolutions that we carry.
The governor spoke about some measure plans and all the rest that have been submitted to your end. That is so far those who have brought this request to your end.
I don't. When there are major indications, intents.
That they've communicated.
Yes, they've communicated that look, we are talking to a few other banks. We are a group of banks talking to ourselves. You see, it is good for you to declare your intention to the regulator, right? But so far what we have not gotten firm commitments that, yes, we have agreed. Banks have discussed among themselves, they have agreed on roadmap for discussions. So when they have discussed and agreed, then they can submit the plan to us. Because the plan you submit to us, let's say if A want to merge with B, there must be some level of understanding, documents signed by both sides, board approvals, shareholders approvals, before we can have a look at it. Okay.
Managing Director of HFC Bank, Anthony Jordan, has hinted that the bank has begun a process to facilitate Caribbean investments into Ghana beginning this year. Ghana and Trinidad and Tobago have had a long-standing trade relations which needs to be enhanced effectively with the Ghana government's industrialization program. He said the bank is ready to seek further support from its parent company, the Republic Bank, in helping investors who would like to take advantage of the business environment between the two nations. He made the disclosure in an interview with Joy Business after addressing a Caribbean trade mission to Ghana.
Program initiatives.
All right, so what we're doing is that we are facilitators. That's how we see ourselves. HFC Bank and Republic Bank are facilitators. There are a lot of investment opportunities, as the minister alluded to, in terms of agro-processing and a number of other areas. So what we're trying to do is to pair companies and investors in Trinidad who want to sell their products here, come and set up joint venture factories with Ghanaian businessmen here, and also to import Ghanaian products and services from Ghana into Trinidad and Tobago. We, on both sides of the Atlantic, would facilitate all of these transactions.
Do you have any special area that you are looking at?
Well, we're looking at agro-processing one, we're looking at oil and gas. We have a lot of experience, Trinidad and Tobago, in oil and gas. Oil was discovered in Trinidad over 100 years ago, and we have done a lot of downstream with gas into methanol, urea, ammonia, and we have that expertise with businessmen coming here to help with that, because we expect oil and gas to expand in terms of production here, and we could only see it growing from strength to strength in terms of the collaboration and providing and helping to facilitate those services and the financing of it as well. Because very often financing is required, and HFC Bank stands ready and willing to provide the financing to facilitate those sorts of transactions. Companies that are in Ghana, we are bankers, but we are also facilitators. Companies that are already in Ghana, they have a project. If we deem it to be bankable, an expansion project they want to do, if it's bankable, meaning there's proven debt servicing capacity in it and that sort of thing, we would be willing to favorably consider financing for these projects.
Do you have any amount earmarked for this program?
Well, we don't have an amount earmarked per se, and I wouldn't want to give out any trade secrets. But let me just say, we will not turn aside from any investment or financing opportunity, even if it means we have to get support from our parent company in Trinidad Republic Bank, which has an asset base of $10 billion, or if we have to do a syndication with local banks here in Ghana, we will get it done.
Let's now turn our attention elsewhere. And Chief Executive of the Ghana Investment Promotion Center, Yofi Grant, in a response to concerns raised by traders over foreign market invasion into the retail market, said government is looking for an alternative for locals to own manufacturing businesses and partner multinationals rather than staying in the retail market continuously. According to Yofi Grant, the practice where locals import goods to sell in the market will be a thing of the past, because government has initiated a process for the promotion of locally manufactured goods in the various markets in the country. Some members of the Ghana Union of Traders, GUTA, have threatened to boycott their tax obligations due to the failure of government to evict foreign retailers from the market. However, in an interview with Joy Business, Yofi Grant says the locals will be empowered to partner multinationals in building factories rather than staying in the retail market.
We are very clear that we want to build a Ghana that is by Ghanaians for Ghanaians. And so we want to promote our Ghanaians to do business here. So even as we go out looking for investors, we look for investors who would partner Ghanaians. I mean, some of the recommendations that I am putting forward for the bigger picture is that maybe in future, companies that will get incentives or get the bigger incentives are those who have partnered with Ghanaians. What we need to do is also uplift our Ghanaian business people. We don't want only to be left at tabletops. We want to own shops. We want to own the manufacturing companies. We want to own the economy. And nonetheless, I mean, notwithstanding that we have investors here, we also want to see Ghanaians grow. I mean, there is no reason. We've been exporting gold and cocoa for more than 200 years. We don't even have one single billionaire out of that. That cannot be satisfactory. But we also need to manufacture such that our traders would not only sell goods that are imported, but goods that we make. And then when they sell our goods, we protect them and give them the incentives to even become bigger. At the end of the day, we want our people to benefit, but we also want them to be the ones who create the opportunity and benefit, so that come 10 years, come 15 years, we have Ghanaian billionaires, we have Ghanaian millionaires who can also then invest in the rest of the sub-region. So yes, there is a concern, but unfortunately, Ghana government partners everybody. So far as you do business and you walk on the streets and you live in Ghana, you have to pay taxes.
But they under even pay the right taxes.
Well, yes, and we expect that in every system you have people who probably misunderstand how important taxes are, and so would find ways and means not to do that. But that is why we are trying to digitize the economy, such that we even make it easier for people to engage government and be able to pay taxes, and also better care for the public purse. Because when there is no good care for the public purse, then people get annoyed that, well, I'm working, I'm paying taxes, but I don't see that the money that I'm working being put to good use. So we need to take better care of the public purse with the Fiscal Administrations Act and all that, which tends to restrict how government even uses the money and prevents government to do it. And I'm very glad we have a very disciplined Minister of Finance. We have a very, very disciplined president who are very clear on that.
Are we sure that this digitization will actually take these foreigners from the retail market?
Well, the issue is, I mean, you want to take foreigners out of the retail market. As at now, the law says that only Ghanaians can sell in certain markets, right? And that is always a question of how do you support your local. I think the bigger question is not whether they should sell in a particular market, but how do we support our business people to grow? How can we give them further incentives? How can we give them greater opportunities such that they can become bigger and more competitive?
It's on Marketplace time now to do some petroleum story. And Tullow Oil has already started benefiting from the favorable ruling by the UN International Tribunal. Now, its share price has started going up on markets outside the country, but investors in Ghana are not benefiting from this surge in capital gains of Tullow shares. Let's now do some analysis. And as usual, George Rafi has joined me in the studio here. George, so what is happening now?
So let me give some quick background of the situation, because the shares of Tullow has a geographical split in terms of their listings. So they are on the London Stock Exchange, they're on the Irish Stock Exchange, and on the Ghana Stock Exchange. Now, what is happening right now is that before this hearing, there are problems about shares, Tullow not doing well. They've had some dips in their earnings and all the rest. So in terms of investor appetite or the interest of these investors to actually get their stock, some of them were even selling out because people were afraid that because of this ruling, they might have challenges in getting these reserves to actually export and improve their earnings. But just after that ruling, we've seen a significant pickup, more of like an 8% jump in the share price. Before this ruling, the share price was trading somewhere around £1 78 pence. Now it's doing somewhere around £1 90 pence. And as we even came on the market, still there was some movement that could see the price go higher than what we are seeing. So why is it happening? Well, because it looks like our market is not that liquid. We don't have majority of these shares being held by retail investors where they could do this exchange. A chunk of these shares in most of these companies listed on the Ghana Stock Exchange are held by institutional investors. And most of these institutional investors, they don't trade. So despite all these things, they because these institutional investors are sitting on huge funds. They bought a lot. So sometimes they want to see whether this trend will be sustained. Will this development end up any improvement of Tullow's earnings before they act? And that is why when you come onto the Ghana market, for instance, beginning of this year, the share price of Tullow was worth 26 Ghana cedis, 88 pesos. It's dropped by almost 10 Ghana cedis, and it's now trading at 17 Ghana cedis at 74 pesos. So it looks like our market is not that liquid, and therefore, despite this positive news, which has resulted in more of the capital gains for investors on these other markets outside, and also a strong improvement in the value of Tullow listed on these markets, the same cannot be said for the Ghanaian market.
No, George, I know very well that stock markets outside the country are so sensitive to some developments. Even a cough by the CEO can trigger some changes. Now, how sure are we that this particular improvement in the stock markets in London and elsewhere are because of the result of the ITLOS ruling?
You engage investors and you engage fund managers, and don't forget that individuals do not have sometimes direct access to these markets. So when you engage these fund managers outside, when you engage these investors or finance houses who place these bets or place these orders on behalf, so for instance, George, you have investments and I have direct access to the Ghana Stock Exchange. If you want to sell, if you want to buy shares, often you channel that to the finance house and engaging these big time and offshore investors who are managing these funds for Tullow, and even for those individuals, this is what they're telling you, that it's because of the fact that they know now that Tullow has access to these reserves and deposits, and they can export them and make good money. It means that they could also attract fresh capital from investors outside to work on these fresh wells.
And drillings.
And if the trajectory is anything to go by, oil prices are picking up.
So and
it's good for them. So you want to get in now and cash in on the benefits that you get from an improved fortunes of Tullow Oil. But as I said, the same cannot be said for
so how are local investors supposed to cash in on this?
Well, some will call it like market arbitrage. If you're able to take your share here and connect it to these investors outside, maybe you can do that. But if not, it looks like you might not benefit from this excitement that we're seeing on the Irish and then the London Stock Exchange.
What about other operators? I mean, other international
or managers?
Or managers?
Those who are managing the stock exchange space. Exactly. I mean, there's always been a call about what they can do to bring about some excitement, because other markets, you saw what happened to ADB, change in leadership and all the other issues there. That much didn't reflect on the market. There are several companies that are listed on the Ghana Stock Exchange, CPC. There's an appointment of a new MD as well. Will that MD bring some interesting ways of turning around the company? You haven't seen the share price pick up that much, even though as we speak right now, there's a suspension of trading in their shares. So it's because we are not having a chunk of these shares in the market being held by normal retail investors who is getting in because he's looking at it as an opportunity to actually make some profit. So imagine if you hold about maybe 10,000 shares and even you have a peso gain on the market.
Now, could it be a wait and see attitude or for the local investors? Should we give them time?
For those, if you've been monitoring the market, you can even say that you will see little impact on the market as well. So wait and see, but maybe it could be a long while, Yafi.
All right, thank you very much.
Thank you so much,
I hope you're not being pessimistic about it.
Let's see.
Thank you very much. That was George Yafi bringing us up to speed with development of Tullow Oil shares, which have surged on the international stock market, specifically London and Scotland. All right, now let's move on, still in the petroleum sector. And the coordinator for the Integrated Social Network, ISODEC, who is also a member of the Public Interest Accountability Committee, Dr. Steve Mantiao, says the total cost of litigation accruing to Ghana in its maritime dispute with the Ivory Coast should have been borne by government instead of the GNPC. Addressing a lecture in Accra, he said the over $3 million expended could have gone into exploration activities. Dr. Mantiao is therefore of the view the money should be refunded back to the GNPC.
$1 million on this litigation, and this money has come from GNPC's allocation for exploratory activities, something I found problematic. It means monies that could have gone into exploration have been spent on litigation. In my view, To the extent that this is a litigation between two states, the financing should have come from government's own resources. And if even GNPC was advancing money, it should have been on the basis of an agreement to refund the money to GNPC so they can use the money for the purpose for which it was approved by Parliament and allocated to it in the first place. Thank you.
Thank you very much.
On his part, petroleum consultant Dr. Tullow Oil, in an interview with Joy Business, thinks we should not lament the cost involved. He noted, considering the larger loss the country could have suffered should Ghana have lost the case, the over $3 million was worth the value gained.
Investment Tips is brought to you by Daffing Finance, Deposits, Investments, Borrowings and Advisory.
What is an investment? It is the conversion of assets, usually money, into a security or enterprise with the objective of preserving the amount of capital as well as earning a reasonable return or percentage on it at a regular interval. Do you know there are broadly 4 types of investment or financial holdings? Let's start with shares or stock or equity investment securities. Shares or stock or equity investment securities. This is an investment representing part ownership in a company. Dividends and capital gains are the returns to expect. Fixed income securities. This is employment of funds in securities or an enterprise in which returns, whether dividend or interest, is a fixed amount.
Investment Tips was brought to you by Daffing Finance, Deposits, Investments, Borrowings and Advisory.
Well, like I said, I mean, we don't need to worry too much about the money. So think of it this way, and I always put it, what would have happened to us had we lost the case, right? In that particular region, we're talking roughly, possibly about 4 billion barrels of oil in there. Even at current prices of, $50, $50 multiplied by 4 billion barrels it's a lot of money, right? And so if we had even lost half of that to the Ivorians, you're talking about multiple billions of dollars that was going to another country, which they could have used for, which we as a country could have used for our development. So $3 million on an international litigation which spanned the period of about 3-4 years, I think it's money well spent. And also remember that they had international consultants, lawyers, who all came in to help. And some of these guys, even an hour of their time, you're talking upwards of $1,000, an hour. Sometimes even, 1,000+ pounds an hour, as I know. So $3 million is really not that much within the grand scheme of things that, one, we have kept our oil fields, nothing is gone anywhere. The court also said that we did not infringe on Côte d'Ivoire's, rights, and therefore we didn't have to repay anything to them as well. And so, I mean, let's look at it really in the big grand scheme, and then we would understand that $3 million is nothing. I mean, we gave Black Stars $3 million, yes, so, yes.
Interesting opinions there by stakeholders of the oil and gas sector. And on that note, we wrap up this afternoon's edition of the Marketplace. Thank you so much for your time, and I hope you did enjoy the package. Let's meet again same time tomorrow. My name is Emmanuel Akwachi. Good afternoon.